All right, so in about 30 minutes, we will see the release of the U.S. retail sales, and I've prepared a couple of charts right here for you. So you can see the anticipated forecast according to a survey conducted by Bloomberg, 0.6%, while the previous data is 0.4%. Over here, we also have the chart indicating how the indicator has been progressing during the course of 12 months. And what we can also add is that the U.S. retail sales edged up 0.4% during the shutdown period in October, signaling economic recovery is stronger than originally thought. The 0.4 gain followed a flat reading in September, as you can see right here, 0%, as the holiday shopping spree is gaining pace. Economists expected a minor climb of 0.1% in October. Meantime, core sales increased 0.2% after gaining 0.3% in September, but again, posted a better reading than the 0.1% rise predicted by analysts. If we talk about a little bit in further detail about the anticipated data, and we can also have a look. There we go. So you can just see everything clearly. We can also talk about a little bit in further detail about what some of the experts are saying. Exactly, in one of the comments by day traders, that Christmas shopping should boost retail sales. Fully agree. But here overall we have some of the economists and firms they represent, as well as their estimates for the upcoming U.S. retail sales. Some of the experts, for example, James Pacerno, editor and analyst at capitalspectrum.com, he says the consumer has remained surprisingly resilient lately. Despite the government shutdown in the first half of October, retail sales for the full month increased the most in June. Was a surprisingly strong update a fluke? Well, not according to economists. The consensus view is that we will see an even better rate of growth in today's November report. So this is just a quick fundamental update on what we can expect. And now Thomas and Alex will have a look at some of the technicals and how the upcoming economic data release will actually impact how the upcoming economic data release will actually impact, what will it impact? Oh, this is dollar, I'm sorry. I'm just really hungry, so I'm again barely focused on the upcoming data release.
So I guess it's very reasonable to assume that United States retail sales should affect United States dollar, but you know, I might be wrong. Okay, getting back to the topic. Today I will be presenting a possible negative surprise trading strategy. So, and I'll be doing that on the Aussie United States dollar. I know that Sasha used to tell that we always used to take it, but now I understood that for some good 2 weeks we haven't taken it because we used to take it very much. So just decided to get back to it. So a few reasons why Aussie United States dollar. First of all, the current market sentiment is strongly bullish. 74% of traders are long on the pair. Also Aussie is one of the most acquired major currencies across the board, if not the most acquired, but in 71% of all cases across the board. Right, and now let me also add what the technical indicators speak about this situation. Right, so as you can see, 10-minute chart actually doesn't give us much. Most of them are neutral. Even the indicators who give, let's say, some sort of trending news, which usually contradict with what I plan to say, usually. Actually do not give any clear indications. The only reasonable support for our ideas is a 30-minute chart, which seems to be, well, working its way, as current trend is rather bullish, at least from the perspective of technical indicators. MACD also says that the pair is being slightly oversold and should continue appreciating, right? So that being it. And about wow. Now this is interesting. Everybody's seeing this, right? So as far as I understand, it is still good. What now? 8 minutes till the release of the data. So what are we having here? To be honest, I'm a little bit surprised what is going on at the moment. Let me see, maybe some news data or something came out, right? So we saw the Aussie United States dollar depreciate for 70 pips now in the course of 2 minutes, not full 2 minutes, 8 minutes till the release of the United States dollar, of the United States retail sales. So at the same time we had Canadian dollar coming out, right? At the same time. So let's see, I'm quickly now going through some news releases to see what's going on and to make some sense out of what is going on, actually, to be honest. Okay. Alexander, maybe you have some ideas on this, or you're as lost in space as I am at the moment. So what we're, okay, flat euro United States dollar was flat. Let's say, what is going on, what is going on? Okay, to be honest, I don't really see anything going on at the moment, right? So, yeah, so hard to actually make sense of what just happened, to be honest. So just to make a little bit more sense, I would stick actually to the idea that whatever just happened actually will have a substantial impact on the what the data release will be saying, to be honest. So Royal Bank Stevens says Australia needs Australian dollar cost of 85 cents. Well, yeah, the quotes, yeah, that's the usual problem with the quotes, I guess, seeing them properly. Let me do it like this then. I hope you can see them now. So it seems that actually pair will continue, the normal range actually will now, as it reached the new weekly low, right over here of at 89.67. So I guess we can scrap this. I would say that if this current market move won't have any further impact in the coming 6 to 8, 7, 8, 9, 10, whatever minutes, I guess it would be reasonable to put the stop loss at new weekly low, so new recent low at 89.67.7, whereas take profit could be set very nicely at this whole area actually, where okay, daily low doesn't really fit here anymore as it's currently weekly and the daily low at the same point. So weekly S1 and daily S1 at around 90 cents. So in my opinion, that could be it if United States data comes out way worse than expected. Right, I'm pretty sure that at least in the short term should jump as high as 90 cents, where stop loss could be easily and actually effectively very nicely put at now weekly and daily low at 89.67.7, since daily S2 provides additional support slightly, what now, 5 pips lower below it at 89.61.2. So yeah, 3 minutes till the release of data. Yeah, Alexander, the floor is all yours now. Have fun.
Let me just find my slides on the whiteboard. Yep, here we go. Actually, I was surprised, the same as you was, Thomas, and if we'll have a look at euro, dollar, and Swiss franc, the pair that I'm going to speak about currently, the initial market reaction on RBA comment that was just 13 pips, so nothing in comparison with Aussie greenback, where the move were almost 95 pips, so quite a modest market reaction. Yeah, but nevertheless, I'm going to speak about the positive surprise trading strategy, which is based on the US dollar and Swiss franc currency pair. And as you can see from my slides, sorry, it is recommended to enter the market at the market price, which is currently 88.71, and the potential take profit will be placed at 88.90, and actually that will be, just a second, sorry. Yeah, so here we go. The recommended take profit is placed just 19 pips now from the market price, while the stop loss at 88.20, that will be 50 pips from the market price. So since the time when I was preparing the chart, as you can see, there was a significant move, which not actually suits perfectly in our strategy yet, but nevertheless, the main reasons behind choosing this pair for the positive price trading strategy is, first of all, strong bullish market sentiment, as 74% of traders are holding long positions on the pair. Meanwhile, the Swiss franc is sold in 72% of all cases, while the greenback is bought in almost 62% of all cases. Yep, and as you can see, the majority of pending orders in the 50 pips range, 100 pips range, and across the board are also placed to buy the pair, meaning that even in a longer term, the pair is likely to appreciate, even despite the fact that during the last 2 weeks, by the way, it's already the 4-hour chart, even despite the fact that during the last 2 weeks, the pair has lost, let me double check, that will be 270 pips. So, and if we have a look at technical indicators, then we can see that they are either sending neutral or sell signal. However, I would like to pay attention on MACD indicator on the hour, 4-hour, and weekly chart, and as you can see, it's suggesting that the market is oversold, and a period of and movement to the north is required before the further depreciation of the pair, for example. So just 1 minute left before the news release, and let me now open the 1 minute chart. So actually, that there is nothing serious at the moment yet. And while we are still waiting for the news release, you can have a look at the table with all market sentiment, with all crosses with the greenback. So yeah, I see that Thomas posted that retail sales came slightly stronger than expected. It's actually 0.7% in comparison with 0.6 expected by market. Yeah, however, retail sales fell 0.4%. If I understand correctly what Thomas just posted in the chat section. However, as you can see, the market reaction is still modest. Yeah, and by the way, the jobs claims are significantly worse than expected at 368,000, up from 298 in the previous week. So the data are really mixed, and yeah, however, we can see there is slight depreciation in the greenback. And even though retail sales used to have so modest impact on the market, this time it can provide some hints on the potential tapering of QE stimulus in December. So we can wait for some significant movements of the pair. And to be precise, that the initial market reaction is just 15 pips, and the pair is rising, so it's almost 17 pips at the moment. And actually, the trading strategy with the greenback and Swiss franc works fine, and there's just 13 pips left before the pair will reach the take profit, which is represented by daily resistance. Yep, daily resistance. So let's wait for one more candle, I guess, and we'll see what happens in the market. Yeah, but as you all probably understood, that will be also moving back, and the pair is still depreciating, while the US dollar Swiss franc is after reaching a daily resistance at 88.77, the pair pulled back more than 80 pips. Yeah, however, still the greenback is likely to receive a strong bullish impetus from the fundamental data, and the appreciation of US dollar and Swiss franc is expected. So I guess that will be all from my side. Hope that was useful for some of you, and back to you, Gita.
Great, many thanks, Alex. Now, Dr. Dow, any comments from your side? What do you think about the latest economic data release? Don't forget to turn on your microphone. Dr. Dow, where did you go? Okay, it seems that Dr. Dow left the building a little bit, but, oh no, there we go, perfect.
Yep, okay. The retail sales had to, I don't know what happened there. The retail sales was very strong. Some of the internal components were really positive, double the numbers that they were expecting, which was really surprising. And the component that shows from the retail sales that goes to the gross domestic product, the GDP from last week, was also very strong. Was anticipated to be up 0.3%, was up 0.5%. There were some really interesting numbers inside of it all. You know, I guess as the hours go on, we get a chance to dissect it faster. But as traders, we have to basically dissect it, as they would say, on the fly. The other thing that's really wild is that we do see the bonds selling off, the price, the yields going up from all that action. That may be more because of the jobless claims. Jobless claims were up 68,000. So that's really wild. We'll have to hear what that is all about at the same time. You know, it's a lot of mixed numbers here this morning. I can say that it seems to show, you can see the Aussie was falling out of bed about 4 minutes before the news. You know, I was thinking maybe they had an idea about the jobless numbers. I threw that up there, something about U.S. jobs, figuring that maybe they spilled the beans a little early. Obviously, are we lost again, or can you hear me? Can you hear me still? Okay, good. And so jobless claims did explode. We did see a story also out of Australia itself about one of the, who was it? I have it right here. What is it? The Reserve Bank of Australia, Glenn Stevens, has called on the nation to face an urgent conversation about the spending cuts or tax reform that will be needed to get the budget back into surplus. I myself think more it's just front running. In other words, as a trader, you always try to find your edge. And, you know, I know that U.S. jobs numbers had an effect on the Aussie last time. And sure enough, we had a monster explosive number out of it, 68,000. Normally you see like 7,000, 12,000 shifts. And sure enough, what did the Aussie do? It fell out of bed about 3 or 4 minutes beforehand. So, you know, as a trader, we're always suspicious. We always think that somebody knows news before us. And that's why I have Dukascopy on, I have Bloomberg on, CNBC on, Fox Business News on, and not counting a little squawk box that tells me raw data. So we're always hunting for the news. That's all I got, Gitta. Just dancing as I usually go.
Thanks, Dr. Dow. Great to have you.